Good day, ladies and gentlemen. Welcome to Everyday Finance with Jay. My name is Jay. Today we're going to be talking about what to do with your emergency savings, or if you have a lot of money saved aside, what to do with it. The reason why I'm talking about this is I wondered about the same question a while back and fretting over my emergency fund savings in a traditional savings account was only earning 0.02, maybe 0.03% in a year. So let's say I have a $10,000 emergency fund. And the same account with that interest rate, I was earning $2 or $3 of interest for $10,000. And at the same time, I'm also contributing money into my retirement account. So I have that amount to compare to the growth of that. And especially in 2019, stock market was fabulous. So my retirement account was growing really well, but with a meager 0.02 savings account interest rate, my emergency fund was stagnant. And especially, let's not forget about inflation. Let's say inflation rate of 2%, 3%, 4%, you're losing over 100 times of the spending power of your emergency fund saving through inflation compared to the amount of money you're earning interest. So basically, think about your emergency fund starting from the top, and it's just like going downhill because you're losing more money on it compared to how much you're earning. So that's the problem, and I have several solutions for you today. Today, I'm going to give you 4 solutions to this problem we just described. So let's not lose hope. The first one is going to invest in a high interest savings account. And I know I talked about how a traditional savings account only offers an interest rate of 0.01% up to 0.03. And the funny thing is that they're with traditional big banks in America that you probably have heard about. For example, Chase, Wells Fargo, Bank of America, US Bank. They're the ones offering the very small amount of interest rate. And some of the banks offer up to 200 times more in interest. For example, a bank called VIO Bank, another one called Comenity Bank. And I know that you may not have heard about them before, and that fact might scare you. You might think about, I'd rather keep my money at a bank I've know about, I can walk to down the street or drive to and only earn a little bit of interest instead of putting somewhere where I've never heard about before and potentially lose all my money. Well, if that's you, don't worry, because, for example, Citibank. And Citibank is a big bank that offers credit cards that you may have heard about, such as Costco, American Airlines, double cash back credit card. Not only do they offer those, they also offer amazing interest rate on their savings account. I checked it last week, and their interest rate was at 1.85. That is 185 times bigger than the interest rate on the savings account at Chase and Wells Fargo. And another bank to check out is Discover. Not only do they offer great credit cards, but their interest rate on savings account are also amazing. Number 2, the next one we're going to talk about is called money market. You may have heard about this before. If not, it basically means it's similar to a savings account, except that in order to qualify for the interest rate, you have to have a minimum deposit. For example, you have to put in $5,000, $10,000, and so on. And sometimes the interest rate that you can find on a money market account might be slightly higher than the high interest savings account we talked about earlier. And if you're not familiar with money market, it works the same way where the amount of money up to a certain amount is insured. So you don't have to worry about if the bank does disappear, some of the money up to a very high amount, hundreds of thousands of dollars, is insured. The third one we're going to talk about are certificate of deposits. It basically means that you'll purchase a certificate for a duration of time, like say 12 months, 18 months, 24, and so on. And then the bank agrees to pay you a certain amount of interest as long as you keep the money in there for that amount of time. And look into what's called penalty-free certificate of deposits, because let's say you buy a 12-month certificate, but then on the 10th month, you suddenly are in emergency and you need to withdraw money that you put in there. Well, if you don't have a penalty-free certificate, sometimes the bank will penalize you for withdrawing money early by taking away some of the interest that you have earned. The last category we're going to talk about are bonds. You may have heard about them before in investment portfolio where you are trying to counteract the riskier stock investment with bonds. What a bond is a big IOU. So basically you give your money to an entity, it could be a corporation, a company, or the government, and they will give you an IOU, a bond, that says that they will pay you back the amount that you lent them and some interest at a future date. And the future date is referred to as maturity date. And there are 4 major types of bonds. There are municipal bonds, corporate bonds, treasury bonds, and agency bonds. Remember, an IOU is only as good as the issuer. So basically, you have to determine whether the place you're buying the bonds from is stable enough where they'll be there so you can get your money back and interest. And in order to sort through whether they're trustworthy or not, you don't have to do that on your own. There are bond ratings out there. The 3 most popular ones are from Moody's, Standard & Poor's, and Fitch. And the way to read those ratings, they have a grading scale from highest to lowest, starting with AAA. So there'll be 3 A's back to back, and then double A, then single A, then triple B, and so on. So today we have covered 4 alternative ways to put your emergency fund. Instead of a traditional savings account at a big bank, some of the biggest banks offer the lowest interest rates. Can you believe that? So the 4 will be high interest savings account, money market, certificate of deposit, or bonds. So what I do with my own money is I invest in a mixture of them. And again, what I would do is seek out financial knowledge from a professional. Anything I'm telling you is just financial knowledge. There's inherent risk to investing. So you don't have to put all your eggs in one basket. So for example, if I need the money in the near future, next month or 2 or next half a year, I have some money in a high savings account. And then if I don't need the money, let's say next year or 2, I have some money put away in a certificate of deposit. And then there's also some more money in a money market. And then I also have some bonds to counteract some of the stock investments I have. And thank you for watching. Again, what I want to do for this channel is to help you reach financial freedom. What that looks like is to be at a point financially where you can pursue your dreams without having to worry about money. For example, retire at a decent age. And again, if you have any questions, please comment down below. I would love to answer them all. Please subscribe and like this video. Thank you.